US data today seemed strong, but when you dig deeper, it was not strong, guys. It was very, very weak. And you can see that in the reaction of the dollar today. USD basically shrugged its shoulders at both the ADP National Employment data release and then at ISM Manufacturing PMI. It shrugged its shoulders at both. It was like, this data, nah, I don't believe it. Let me explain why. So we'll start with ADP National Employment. Basically, ADP, they're a payroll company and they release this data every month where they basically say how many jobs were gained or lost in the US economy in the month. Now, this month, well, I mean actually March, for March, they said that only 27,000 jobs were lost in the US. That was a lot better than expectations, right? So the expectations were for something like 150,000 jobs to be lost. But, this is really important, but ADP told us today that the time period when they collected their data only went up until about the middle of March. And what do we know about what happened with all the lockdowns in the US economy? All the lockdowns came into force really in the second half of March. And we've seen that in the spike in initial jobless claims data that started in the third week of March and is expected to continue this week. So basically, as soon as ADP told us that their data was collected in the first half of the month, everybody went, oh, right, okay, so it was good data, but it's completely irrelevant because it's pre-COVID-19. Now, moving on to ISM Manufacturing data, that was also a big beat. It came in at 49.1. Markets expected something closer to 45 or even 43.6, I saw. However, that data was distorted by something else. Okay, so bear in mind when you're putting together one of these PMI indices, you have subcomponents, you have smaller parts of the index such as new orders, employment, supply delivery times, prices paid. All of these subcomponents come together to form the headline, and delivery times was a big jump. Now usually when delivery times does a big jump, that's seen as a good thing because it means suppliers, they've got lots of demand, they're struggling to fulfill all their orders, so it's taking them longer. But what do we know at the moment? Guys, delivery times are only going up because of really bad disruptions in global supply chains because of coronavirus lockdowns. So it's not good. It's not a good thing that supply delivery times are going up. But that has boosted ISM manufacturing. So basically what happened is traders ignored the headline and they just looked at the other sub indices. So basically employment, that was at lows not seen since 2009. New orders, which is seen as the most forward-looking aspect of the report, that was at lows not seen since 2009. Prices paid, I think that dropped to about 37, so way in contraction. Not good. But guys, in terms of data this week then, what is the main focus? Well, we are looking ahead to weekly initial jobless claims data tomorrow. We've had some reports today saying that NFP data on Friday, which would usually be the most important data of the month, is distorted in the same way as ADP today. So we're going to be focused on jobless claims tomorrow. That is where the USD risk lies. Remember last week USD sold off after jobless claims? Could happen again. Who knows? Check out the blog below. I'll go into more detail. Check out our memberships at Freak Network because I cover all of these events, or we cover all of these events in real time for all of our members. We're all over it, guys. That is it from me for now, and I'll see you in the next.